area that you will encounter quite regularly in the unit is this idea of other comprehensive income. So other comprehensive income, they represent pretty much an increase in equity. However, they are not the result of actual day-to-day operations. Okay? Other comprehensive income is the increase in equities that occur because of a movement in the reserve account, okay, rather than retained earnings. Okay, so this is a really important distinction. So the most common forms of other comprehensive income are these examples here. So the revaluation of land and buildings, foreign currency translation reserves, fair value through OCI investments, cash flow hedges, and share of comprehensive income from associates using an equity method. So these are all examples of transactions that ultimately result in an increase in the reserve account that is not from the day-to-day operations of the company. Okay, so that is ultimately what OCI is about. Then we have the statement of changes in equity, which is the more straightforward statement. And what it simply shows you is that it breaks down components within the equity account, and it recognizes the changes in those sub-equity accounts. So within the equity account of, say, a fictitious company, you've got issued capital, you've got a cash flow hedge reserve, you have a foreign currency translation reserve, you have retained earnings and revaluation surplus. What this statement does is that it looks at how these amounts have changed over the year. Okay, so it's simply just a reconciliation of the sub-accounts within equity. So you can see that these are the balances at the start of the year, and then these are the balances at the end of the year. Then we have a cash flow statement. So a cash flow statement is all about understanding the movement of cash within the company. Now, cash and cash equivalents is a term on the balance sheet where it pretty much calculates what is the amount of cash that the company has on hand. Now, when accountants prepare the cash flow statement, they will look at changes in cash flow that occur across three major areas. So they include operating cash flows. So think of operating cash flows as coming from the day-to-day operations of the company. You have investing cash flows, which is largely there to facilitate the purchase and acquisition of property, plant, and equipment. Okay, and you have the sale of PPE as well. And then you have financing cash flows, which are mainly related when the company issues new equity or when companies pay back debt borrowings. Okay, so these will be the three major